It's the currency segment now. In this space, the rupee actually had a weak day, ending at 54.70, and mainly because the equity markets have not been doing that great. Poor global cues supported this particular fall, and uncertainty over the U.S. Fiscal cliff and increased demand for the dollar weighed on the Indian currency. We have Hemal Doshi, Senior Manager at Geojit Comtrade, joining us on the phone line from Mumbai. Hemal, what's your outlook on the rupee? It has actually surprised a lot on the street. Because we were talking about levels of 48, 49 in the next couple of months. But last couple of weeks, there has been redemption from the FII side, and the rupee is actually heading lower, back to 55.
Yeah, see, if we talk about the recent past, around 52, 52 and a half levels, the market was very short at those point in time, and everybody were expecting levels of 49 or 50 maybe. But after that, a lot of defense-related payments and bunched up oil demand, which was there on a continuous basis, that actually changed the direction of the market. And a break of, critical technical levels also lead to a lot of stop losses and everything.
So in the immediate near term, 54.70 was the closing today. For traders out there, what is the kind of range you can suggest the rupee is expected to trade in?
See, as far as it was 54, it was above 54.80. The range was 54.80 to 55.20. But today, surprisingly, the market have closed below the critical resistance of 54.80. So the short-term momentum traders, you can look for kind of a rupee appreciation at least towards 54.20, in the next few sessions.
We've been talking about fiscal cliff in the US. Even the news coming in that Eurozone area has slipped back into a recession. This will actually attract a lot of dollar buying and hence additional weakness on our own local currency. Do you agree with that?
Yeah, see, if we see euro as a pair, it has just bounced back from the lows of, sub 1.27 levels, and it has bounced back towards 1.2770 or 60. So, if we see the shorter-term chart, it was the oscillators and the technical indicators were fairly oversold, so a bounce was expected. So that bounce has come back. So probably this bounce can, still continue towards 1.2825 or 1.2850, which would, effectively translate into dollar rupee level of 54 or 54.20 kind of levels. So till that time, market can come. But yes, all this fiscal cliff tensions and Eurozone problems will obviously, play a role in the market. And again, we can see dollar buying from there.
Hemal, we are also observing, relatively lower volumes in the equity markets. Also, December is traditionally not a very great, time period where FIs pour in money. So, what is the worst case scenario you are factoring in for the rupee to slip to in the next 2 to 3 weeks far out?
See, worst case scenario, if I don't see it going much lower than, maybe 55 half or those kind of levels, because the earlier, the congestion pattern between 56 and 55 was broken, and again we are heading towards those levels. So, that range will be very difficult to be broken. So, worst come worst, I think 55 half or 55.80 can be the worst, which can at least happen in the near term.
So, what strategies are you recommending your traders at Geojit?
See, the break of 54.80, obviously, we were, recommending to sell dollars and buy rupee for, with a stop loss of kind of 55.10 levels and target of 54.20. So, today market is closed in favor. So, hopefully, we will, I would recommend traders to remain short dollars till 54.20 levels. And, you can look to take your profits out there.
But are you also factoring in intervention from the RBI, which usually start supplying more dollars in the market? Are you factoring in that in your strategy?
No. See, RBI intervention, they've always said that if there is any kind of, undue volatility in the market, so they'll obviously come and only smoothen out the volatility. They'll never do anything to change the direction of the market. So, any factoring from the RBI side it's not warranted as of now. I don't think so. That is
all right.
Very important as of now.
Hemal, apart from the rupee, is there any other pair trade which you would recommend in the currency space to our trading community?
One is GBP INR, which is a good, pair to short right now. It's close to the November future is close to 87.05. So that is a very, I guess, a juicy trade to short. With you can keep a stop loss of close to 87.60 and profit, and even look to take profits around 85.80 or 86.
All right, Hemal, thanks a lot for joining us on the show today with that views. Vijay, I'd like to take your opinion on the rupee dollar pair particularly. You look at it quite closely. Do you think there is an immediate downside and people can short it even from these levels, or traders who are already holding on to their short positions, as Hemal was also suggesting, should cover now?
Ajay, I think in the absolute near term, there might be a possibility of the USD INR levels going down to maybe 54 and a quarter. I'm talking of the November future series on the NSE currency segment. But my opinion is somewhat contrarian. I think the USD is likely to strengthen vis-a-vis the INR. The temporary weakness that you are witnessing is because of the news emanating from the US about a signature campaign triggered off by some parties about seceding from the US Union. Approximately 47 states, if I'm not mistaken, want to basically separate from the Confederation of States of United States of America. This is a temporary phase. I don't think this is likely to push through. And once the cloud on the USD INR is cleared out, my guess is the USD INR is headed towards 55.5 levels, if not higher. Once the rupee sinks below 55.5, I think there would be a bear squeeze, and the rupee can actually depreciate further.